So will we see more rate cuts this year? Joining us by phone, Scott Minerd, Global Chief Investment Officer at Guggenheim Partners. I guess, Scott, the question is not if at this point, it's how many rate cuts.
Well, I think you're right, Sarah. And I tell you, Chairman Powell has jumped into the rate cut pond with both feet today. I think obviously we're going to get one in July, but I think we're going to get at least 75 basis points or 3 cuts before the end of the year. The chairman has made it clear.
That's not consensus.
Well, when was I ever in the consensus? But anyway, the chairman has made it very clear that he wants to avoid a recession. And interestingly enough, following the chairman's testimony today, when we got the minutes, over 80% of the participants at the Federal Reserve in their survey show that they see downside risk to their economic outlook. So the bottom line is there's a growing consensus inside the Federal Reserve that recession risks are mounting, and the chairman is determined that he is going to try to do everything he can to avoid it.
Scott, do you think he's jumping into the rate cut pond too aggressively?
Well, Willie, it raises a very interesting question here, and that is this the rate cut that precedes a recession, or is this a rate cut like we got in 1998? And for those who don't remember, the Federal Reserve preemptively cut interest rates during the Asian crisis, and it set off a stock market boom. If this is a replay of 1998, which I think there's a fairly high possibility that it is, then we should expect to see the S&P at 3,500 before it's finished. So I think that perhaps the Fed is being overly aggressive here, that in all likelihood the economy is not doing as poorly as some people think, and we're probably going to overshoot in terms of providing too much stimulus at this phase.